Listen carefully, because what you're about to hear could save you from the biggest financial mistake of your life. Every year, millions of people sign a mortgage, and they don't realize the truth. They didn't buy a house. They bought 30 years of pressure, 30 years of payments, 30 years of being tied to one decision they made emotionally. And the shocking part, most people don't even understand what they signed. Peter Lynch, one of the greatest financial minds in history, exposed this decades ago. He said, "People don't get destroyed by the house they buy. They get destroyed by the mortgage they never understood." If you're planning to buy a home, if you already feel suffocated by your mortgage, or if you simply want to avoid the trap that keeps millions poor, do not skip this. Because by the end of this video, you will understand why most people stay trapped and how Peter Lynch's simple rule can change your entire financial future. The dream that turns into a prison. Since childhood, you were told, buy a house, that's the dream. You're wasting money by renting. Buying a house makes you successful. But here's the part nobody said. A house can make you poor for decades if you buy it wrong. Let me ask you something right now. Do you actually want a house, or do you want the feeling of success it represents? Think about that. Because real estate agents, banks, even family members, they all push you toward the same thing. Buy fast, buy big, buy now. And this creates the perfect trap. You buy emotionally, you borrow logically, you pay painfully. Most people don't run the numbers. They just say, I think I can handle the monthly payment. But here's the truth. Banks approve you based on the maximum amount they can profit from, not the amount that keeps you financially safe. And in just a moment, you'll understand why this happens, and it may surprise you. The real cost of a normal mortgage. Let's break the illusion. You walk into a bank. They approve you for a 30-year mortgage. You feel proud. I got approved. But here's what really happened. You didn't buy a $350,000 home. You bought $700,000 to $850,000 of total lifetime cost. Why? Because you pay interest, taxes, insurance, HOA fees, maintenance, repairs, appliances, renovations, lawn care, unexpected damages, emergency breakdowns, higher utility costs, furniture upgrades, lifestyle inflation, and the most dangerous cost of all, the cost of stress. Let me ask you a simple question. If your income dropped by 20% for a few months, would your mortgage crush you? Most people say yes, and that should terrify you, because mortgages don't care about recessions. Mortgages don't care about layoffs. Mortgages don't care about medical bills. They just demand payment. And keep watching. You're about to understand the truth behind this, and it may surprise you. Example. John bought a house for $400,000. His interest rate was average. His monthly payment seemed manageable. 5 years later, his AC broke, $6,200. His roof leaked, $11,000. His property taxes went up, plus $1,800 per year. His HOA increased, plus $95 per month. Suddenly, the house he could afford became a house he couldn't breathe inside. This is the trap Peter Lynch warned about. Peter Lynch's golden mortgage rule. Peter Lynch gave a rule that almost nobody follows. Whatever mortgage the bank approves you for, cut it in half. If the bank says you can afford a $3,000 mortgage, your real limit is $1,500. If they say you can afford a $600,000 house, your real limit is around $300,000. Why? Because banks approve you based on how much you can pay them, not based on how much you need left to live your life. They do not consider your future goals, your investments, your emergencies, your kids, your career risks, your mental health, your retirement. But you must. Stay with me. The reason this rule works so well is coming next. The opportunity cost that destroys wealth. Here's something people never think about. A big mortgage doesn't just take your money, it steals your future. Why? Because the money you should be investing goes into your walls, your roof, your flooring, your debt. Let's do a simple example. If you invest $800 a month for 30 years, you can end up with $900,000 plus. But if your mortgage is too big and you can't invest until 10 years later, you lose hundreds of thousands of dollars in compounding. Just because of one decision, one mortgage, one emotional purchase. This is why Peter Lynch said, no investment strategy can protect you if your lifestyle prevents you from investing. And keep watching, because the most shocking part is coming up. Example: Sarah rented an apartment for years. Her friends bought homes and said she was wasting money. So she bought a house. Her mortgage was $2,700 a month. She could technically afford it, but she could no longer invest like before. 10 years later, her friends who kept investing ended up wealthier, while she was house rich, cash poor, and stressed. Buying the house didn't make her lose, the mortgage did. The ego trap. People don't buy homes for shelter, they buy them for identity. A bigger home makes you feel successful, a certain neighborhood makes you feel respected, a nice kitchen makes you feel proud, a big mortgage makes you feel grown up. But Peter Lynch warned, wealthy people don't look wealthy. Their money is working for them. Your home shouldn't be your appearance. Your home shouldn't be your ego. Your home shouldn't be the reason you sacrifice financial freedom. And in a moment, you'll see why this ego trap is so dangerous. The hidden psychological trap. Here's something most people ignore. When you buy a house, you think your life will stay stable for 30 years, but life is unpredictable. Mortgages don't adjust when you lose your job, when a medical emergency hits, when you have a baby, when your marriage changes, when your parents need help, when the economy shifts, when interest rates spike, when your income drops, when your mental health declines. But your payment stays exactly the same. This is why so many people feel trapped. They aren't trapped by the house. They're trapped by their lack of flexibility. And keep watching, because the test to know whether you're about to fall into this trap is coming soon. The stress test Peter Lynch followers use. Before buying any home, ask yourself, if my income dropped by 30%, could I still comfortably pay this mortgage? Not barely pay, not survive, but comfortably pay. With savings untouched, lifestyle unchanged, no panic, no stress, no guilt, no fear. If the answer is no, Peter Lynch would say you're walking into a trap. And keep watching, because the final question is the most important one. The one question you must ask before buying. Peter Lynch said this is the only question that truly matters. Will this house allow me to invest every single month for the next 30 years? Because if your mortgage stops you from investing, you don't own the house owns you. Ask yourself, will this home give me stability or tie me to stress? Will this mortgage give me flexibility or lock me into debt? The house should support your life, not take control of it. And don't skip, the final message ties everything together. The conclusion people need to hear. Buying a house isn't the dream. Owning your life is the dream. A mortgage can be a beautiful thing. It can create stability, safety, long-term happiness. But only if you follow Peter Lynch's rule. Never let a mortgage stop you from investing in your future. If the house limits your freedom, if the mortgage steals your peace, if the payments crush your ability to grow, then the dream house becomes a lifelong financial nightmare. Remember, you're not buying walls. You're buying 30 years of your future. Choose wisely.